Hi, I'm Paige Steers. We're here at the MBA conference giving you the insights on what's really happening. And I'm with Reed McGlamory. And Reed, you've been talking to lenders, you've been in meetings all week. How has the tone really changed in the last year? Or what's it like out there today?
I think the tone is dramatically different than it was a year ago in a very positive way. One sense is that the CMBS lenders are back in full force. A year ago there were 5 perhaps in the market, now there are 25. All of them are saying they have aggressive goals for 2011. The issuance we've heard for the goals as an industry would be $50 billion in CMBS this year. I also heard $85 billion this morning, so it seems to grow. And the overall tone is people think that real estate fundamentals are coming back. Lenders are increasing allocations for this year and looking more aggressively at doing deals. And so I think it's all positive across the country. I think gateway markets are going to see a lot of that capital inflowing from lenders. And markets where I'm based in Los Angeles will clearly benefit from that, as well as markets up and down the West Coast that primarily see a lot of equity and debt interest.
Well, that's interesting. So if you are saying that everybody's positive and optimism is spreading and the conduits are coming back into the market, so does that mean that liquidity is available for every asset and every property type yet?
We're still seeing a lot of the haves and have-nots, and we've heard that a lot, and that continues to be the trend where the trophy core, exceptional deals with great sponsors, moderate leverage, those deals are being chased heavily and courted by all platforms, if you will. The issues are on the deals that need recapitalizations, where maybe they've lost tenants, or maybe the sponsor does not have money to re-tenant the building, they're running out of cash, or there's other issues going on in the marketplace, for example, that make it challenging. Those deals are going to be harder to finance. They have been for a while, and they will continue to be so. I think with CMBS coming back, to reference them again, I think they'll fill the void of kind of some of the in-between deals. The life companies are playing for core, exceptional product in gateway markets. The CMBS players will hopefully take some of the quote tweener deals, and then the stuff that's not playing out so favorably economically will still probably looking for recapitalizations with new equity injections, or it's going to be high octane capital.
So there's still some haircuts being taken, it
Sure.
sounds like, and there's a lot of maturity still on the balance sheet of banks.
Correct.
And so I think that they've written down $8 billion is what I've been hearing. So how much more of this needs to be done, and when is it? I mean, are they even motivated to sell now and start clearing the balance sheets?
I think it depends, and that's a very casual, carefree answer, but I think it does depend. I think some institutions are motivated to work through loans and restructure and stay with the current sponsorship. Other institutions have basically said, we want to move stuff off the books. We're going to sell the notes at a discount, move them out, and create some new capital so we can become a healthier institution and go out and lend new money. But I think that it's overall, we're going to see a lot of restructures again throughout this year and into 2012. And I think we will see some strategic note sales and strategic REO sales also for the next several years. So I think it just depends on the overall position of the bank and where they feel the fundamentals of real estate are going.
Are we going to see some strategic construction financing?
Hopefully. It's going to, I would say we're not going to see it in office in most markets. There's really not a need for new office buildings in a lot of spots. I think that where we are seeing construction is multifamily. I think that is certainly back. We're seeing a lot of investors looking for new capital. They are building to core is the new buzz, as we've probably all heard. I think that strategically as a pure construction play is back. Rehab plays where it may just be a bridge deal but has a construction component. I think we'll see more of that this year and into next. But traditional construction for a lot of property types, hotels, we're hearing that in some very select markets like Manhattan, but traditionally that's going to be out for a while. Retail, unless you've got a big tenant, unless you've got some really
big anchor.
Yeah, exactly. You're not going to see a lot of that. So it's be very select and few and far between, but it should improve even in those stages.
Okay, so more improvements happening over time. It'll get stronger. Sounds like it's a good report then overall. The good things are happening, so thank you for joining us.
Of course.
I'd like you to stay tuned. We're going to come back with more insights.